Good morning. Welcome to the morning market briefing. Today is Monday, December 29th, 2025. I think we're on YouTube and I think we have video. We have video. So we are live. We are doing this on YouTube for the first time. So please give a hearty congratulations to producer Hicks for setting this up. He spent a number of weeks now really trying to get everything ready to go in the studio here. We now have 3 cameras. We now have 2 monitors. He's got kind of a mega desk set up. Really, we'll call it a super desk for a super producer, and that's what he is. But we'll get right into it today. Kind of recap a bit of what happened last week because we didn't have any calls Wednesday through Friday. And then we'll also talk a little bit about what happened over the weekend. The upshot is there really wasn't that much happening. In the market memo I wrote, I used a quote from a comedian from the 1960s in the UK called Michael Flanders, and he said that it's pretty incredible when the newspapers are shut for the day. Nothing happens in the news. It's really interesting how the media itself creates a news cycle. So I thought that was an interesting and apropos quote. But today we'll start off by talking a little bit about geopolitics and the investment implications. I really want to discuss what the implications are of the news on the markets today. So that's going to be a big focus and theme as we go forward, not just today, but also into 2026. But first of all, we did have that big press conference between Trump and Zelensky yesterday talking about peace in Ukraine. Some headlines will say no breakthrough. Other headlines will say progress made. And I think both are true. There was no definitive breakthrough in terms of peace talks, but it does seem like that both parties are much closer to an agreement. Zelensky does want 30 to 50 years of security guarantees. The Trump administration had initially proposed 15 as part of their 20-point plan, but they went over each piece. And generally, I think there's a decent amount of agreement. I think the security guarantees can be cleared up. It's important to note here that the Europeans are actually going to be leading on the security guarantee, much more so than the United States. And then with respect to the other issues that need to be cleared up, a lot of it is the territory in the Donbass region. Especially the territory in the Donbass region, which is still under Ukrainian control. Russia is resistant to sign any deal that gives any of the Donbass region back to Ukraine. But it does seem like Russia wants to help in the reconstruction of Ukraine, which would be, some people might say it's a positive. Other cynics might say this is their way to get more of a foothold into Ukraine. So we'll have to see what happens with that. And then Zelensky said that a lot of these discussions are going to continue throughout the month of January, both with the European partners as well as with the Russians, with the hope of getting something done by the end of January and perhaps early February. I would say he did mention the concept of a referendum, so not going through Parliament for this peace deal, but rather going to the people, which I think opens a whole nother can of worms and can really drag this on for some time and probably and potentially seriously undercut the likelihood that a peace deal gets done. The logistics of it would be monumental, including all of the Ukrainian citizens who have previously left Ukraine and fled to places like Poland or Germany. In order to get out of what is a war zone, they would all have to come back and vote in any referendum. So that's an issue that would have to be resolved. And then all of the political machinations that lead up to the referendum could cause a lot of consternation on both sides. So we'll have to see what happens with this. I do think that we're closer to a peace deal, but we're not close to a peace deal, if that makes sense. The investment implication of this means that there's obviously nothing direct yet because we don't even have a peace deal. But it probably means that if we were to get some sort of deal, it would mean for probably cheaper energy, especially in Europe on the natural gas side. So that would really help them lower utility prices, lower energy prices. It would also lower fertilizer prices because they're big exporters of fertilizer. So generally, I think those would be the immediate implications of said deal if the talks were to go through. Separately, Trump is continuing his peace talks, I guess, with Netanyahu today. Netanyahu is going to visit Mar-a-Lago. They're going to be speaking today around 1 p.m. and they're gonna talk about the ongoing peace deal in Israel and Palestine and the Palestinian area. So we'll have to see what happens with that. I'm not optimistic. It seems like both of them, it's kind of a love fest when both of them meet and nothing else really gets done, at least since the big deal, of course. So I think it's kind of a status quo there and not really any significant investment implications of that. While we were away, also on Christmas Eve, Nvidia on Christmas Eve acquired Groq. Not that Groq, the other Groq. There's a Groq with a K, which is owned by Twitter, and a Groq with a Q, Groq, that is privately owned, and in fact is partly owned by big investment firms like BlackRock, as well as guys like Donald Trump Jr. and Chamath Palihapitiya, who invested just 3 months ago at a $6.9 billion valuation in this company. And now Nvidia is essentially giving them $20 billion for they call it a non-exclusive license. But as part of that deal, 90% of the employees are going to join Nvidia. The CEO is going to join Nvidia. And the only business that basically will be left at Groq is called Groq Cloud. And that's going to be run by the CFO, Simon Edwards. That's about 8% of their revenue. And it basically is a chip renting business. So it's a chip and software renting business. So it's not anything really significant, $40 million in annual revenue. The chip manufacturing, the chip design business, that basically will all go to Nvidia. So it is very interesting that Nvidia is doing this. And we've talked about this a while. But basically what NVIDIA is trying to do with all these investments is that rather than make acquisitions, which they know will be an issue with antitrust authorities, what they're doing is they're just making these acqui-hires, acquisitions for hire, basically, taking technology and not officially acquiring the business. So they basically acquired Groq for everything but Groq Inc., for $20 billion. What does Groq do? It was founded in 2016. It makes chips and software to run AI models. The CEO, Jonathan Ross, had previously worked on an earlier version of Google's in-house AI chips called tensor processing units. But under Groq, they're called language processing units, LPUs. And what's interesting about this is they're built for inference. So when you have these large language models, which are basically everything that we're familiar with AI, you have training and then you have inference. When you train the model, which is what ChatGPT is constantly doing in the background so that when they can come out with a new version of ChatGPT, they have to train that model so it knows what to look for and how to respond. That's very computer intensive, and it uses a lot of GPUs, and that's where NVIDIA is very, very strong. NVIDIA is also strong using its GPUs for inference, but it's not as efficient, which is why you've seen a lot of companies like Broadcom and as well as companies like Google and Meta and Amazon all create their own chips internally called ASICs, application-specific integrated circuits. And what these do, these are specifically run for inference. So once you have the model, the inference model then goes in and selects and solves the problem for you. So it doesn't have to train the model. It just has to infer what's going on. And so NVIDIA, you can do this with GPUs, but it's not as efficient. And so what NVIDIA is doing is now they can compete on this landscape as well. To date, the GPUs have been more powerful than Groq's LPUs, but that is going to change in the next couple of generations, and NVIDIA knows this. So although Groq's only doing $500 million in revenue currently, they're going to expand that substantially. And so a lot of Wall Street is very, very positive on this deal because it basically entrenches Nvidia as a leader in inference as it has been in training. So this is really important for AI. It's probably a little bit negative for other companies like Broadcom and Marvell, who have developed their, co-designed ASIC chips for inference applications specifically, because now you have the 800-pound gorilla in the room, Nvidia, owning probably the leading independent technology provider of inference chips. So that's a good deal for Nvidia. It wouldn't have been approved in all likelihood if they went out and bought the company. And so this is kind of a way to get around it. And it's not just Nvidia that's doing this. Google's been doing it. Amazon's been doing it. Even Apple's been doing it. And so this is not something new to the industry, but it's one of the biggest in terms of size. So $20 billion Nvidia paying for Groq. We also hit an all-time high in the S&P 500 on Christmas Eve. The market was down slightly on Friday, so we're about 0.5%, including futures right now, away from all-time highs on the S&P 500. I would say a lot of this has been due to, and we talked about this on the call a month ago, at conferences, you had analysts, sell-side analysts, really, really talking up company expectations going into 2026, basically asking exceptionally leading questions of aggressive modeling assumptions for these companies. And these companies can't really say no. And so all these analysts were able to move their price targets higher, which allowed them to, benefit from this from this December rally that we've had. And that's been a good thing for markets, and it's driven markets to all-time highs. And typically after an all-time high, you get another all-time high. So that's tends to be what happened, of course, unless you don't. But it's a good thing to be at all-time highs. I would say expectations are now higher going into January than they were going into December. So I think that's something to bear in mind, and that's something that we'll be considering as we manage portfolios into the beginning of the year. The final point today is that copper is just going crazy. It's up 15% in December alone. You have Trump tariffs on refined copper that are potentially taking place in the middle of 2026. I think this is just a massive land grab. People are concerned about any commodity that could be in short supply. And with all the data center build-outs and with the potential for more construction happening in 2026, you're going to need a lot of copper for that. If China starts to improve, which they haven't in 2025. If China starts to rebound a little bit, you're going to need copper there. So the implication here is that people are pursuing this massive land grab on copper, which is really improving the price there. But it could creep into inflation, especially as a lot of companies look to invest next year. They might see some price increases due to copper and related components. So with that, we'll leave it there for today. We'll be back here tomorrow. Tomorrow we do have Fed minutes, but that's really the only big data point of the week. So should be a fairly light news week. We'll probably talk some college football ahead of the bowl game, ahead of the playoff games on Wednesday and Thursday. And then we'll also give you some thoughts as we head into 2026, some summary thoughts ahead of our big macro presentation in a couple of weeks. For now, have a great day. Continue to enjoy the break if you're off, and hope you have a relatively slow, easy end to the year if you are at work as well. Have a great day. Bye for now.